Good afternoon, everyone. Today I'm doing a final presentation for today and talking about Singapore market, which is something very close to everyone's hearts. As all of us know that the residential market has been slowing very much for the last 1 year, ever since the total debt servicing ratio framework came out by the government in June last year. So I'm going to focus more on these two unique segments, which is shoebox and dual key units. These two types of unit configurations came out, in fact, and became more popular in recent years because as more developers join in the market to fight for buyers, they have to innovate and find ways to attract buyers in this current price-sensitive market. So as I share with you on some trends, as well as some outlook, feel free to digest this information and feel free to ask some questions during our panel discussion later on. Right, shoebox units, is it still a very fitting investment in this current market? First and foremost, let's see what do we mean by shoebox units. About 2 years ago, our Minister of National Development, Mr. Khaw Boon Wan, in his blog, he wrote that shoebox is less than 500 square feet, which is about 47 square meters. And later on, our Urban Redevelopment Authority sought to give a definition by saying that it is about less than 506 square feet. So it's a little bit more precise. And in our and then last 2 years ago, in order to curb, the proliferation of small units, especially outside the central area, the government came out with this rule to be imposed on developers, whereby developments outside the central area, they have to design the number of units such that the average unit size cannot exceed 70 square meters. So that goes to say that developers have to be very conscious to ensure that they do not have too many or too high proportion of shoebox units. So going forward in the price analysis that I'll be showing you later on, we are actually using a size of 500 square feet in our analysis. So what is 500 square feet or a shoebox unit size to you? So in this layout was actually being done with 635 square feet by this developer called Roxy, whereby they tried to launch actually a 3-bedroom with a 635 square feet and really small, and that was launched sometime 2 years ago. So 635 square feet, you get about 5 car park spaces. So 508 square feet, maybe about 4 cars, and you may have encountered some shoebox unit sizes that is only about less than 400 square feet, and that's only 3 car lot sizes. So what do you think with such a small size, can we still live in it? Actually, the shoebox concept is not new in Singapore. In fact, back in the old days, since even as back to 1972, People's Park Complex, you have some small shoebox units, and then subsequently a handful of developments like Cashew Park, Oxley, UE Square and Moonstone also have a certain proportion of small size units. And for People's Park Complex, you can see size of as small as 38 square meters, and that's already in the 1970s. But back then, having small units is to meet the affordability of low-income earners back then in the 1970s. However, it became very popular, especially after the global financial crisis in 2008. In fact, you see that the number of shoebox unit transactions have, in fact, more than tripled from the last 2 years when, after the global financial crisis, our property market actually ballooned in terms of prices and transactions from 4 years on until last year when the TDSR was being implemented. So in the past, shoebox units has been concentrated in the central area, and then later it spread to the fringe area, which is the city fringe areas, and we start to see more shoebox units in the last 2 new launches in the last 2 years in the suburban areas as well. The main reason is because developers is trying to keep the overall price quantum affordable so that more greater pool of buyers can buy private residential units with a shoebox size. So just take a look at how has been the number of shoebox unit launches for the last 2 years, you notice that the proportion of Shoebox unit launches was the highest in the first half of 2013, and that is actually at the height of the property market boom before TDSR came in. And then also the number of unit launches was also at one of its highest. And after the TDSR came out, you can see that the proportion of Shoebox unit launches dipped slightly, and then now it is back up about 16%. So if we break down further on the number of launches in the 3 main regions, you will notice that the proportion of Shoebox unit launches in the city fringe, which is the rest of central region, has climbed to touch about 35% of the overall launches in the rest of central region. And as for outside central region, the proportion of Shoebox units has fallen to less than 10%, around 7%. And then for the core central region, there has not been much new launches because the high-end market has been very weak, especially for the last 6 quarters. This is mainly due to the additional buyer stamp duty that's imposed on foreigners, whereby it's about 15%. So from these 3 regions, you can see that there are a lot more Shoebox units available in the city fringe area. So now we look at sales volume of new launch projects. You will see that it has been very volatile in terms of the number of Shoebox unit launches out of the overall number of units that's being sold. So you can see that in second quarter 2011, 2012, and first quarter 2014, the proportion of Shoebox unit sales is higher, above 20%. And then at the mid-level, it's about 15% in second quarter 2012 and second quarter and fourth quarter 2013. And then during the times when the proportion of Shoebox unit sales is not at its highest is when the market is a bit slow, like fourth quarter 2012 and third quarter 2014. So if we look at how the timing was when the proportion of Shoebox unit sales is at the highest, in fact, incidentally, it normally occurs after a cooling measure came out. Like for example, after the first additional buyer stamp duty came out in the last quarter of 2011, then following that you see that there's a high jump. And then after the 7th round of cooling measures came out in January 2013, and then you see that it starts to pick up again. Now let's look at how has the price trends been for Shoebox units versus non-Shoebox units, meaning units that's more than 500 square feet. You will see that it has been a volatile trend, and essentially Shoebox unit average prices on a per square foot basis is usually higher than non-Shoebox units because being smaller, it has greater value on a per square foot basis. You see that the price premium over non-Shoebox units was at its highest in first quarter 2011, where it's about 28%. And then first quarter 2012 is about 11%. And then after the 7th round of cooling measures, right, you notice that it went back up again to 26%. However, after the TDSR, where the overall price quantum became really sensitive, and some developers start to reduce prices, the premium narrowed to about 13%. And then in the latest quarter, which is third quarter, the price premium still maintains at around 14%. So by and large, the average price of Shoebox unit, it's about island-wide, it's about close to 1,007 per square foot. That will mean that your price quantum of a Shoebox unit is about 900,000. Now, as we look further on the average price trends for main areas in Singapore, let's look at core central region. You notice that most of the time, Shoebox average prices are higher than non-Shoebox average prices. You see that there's a huge drop here because during this time, after the 7th round of cooling measures came out, one project called Deleden actually had some huge price discounts, and that's why that caused a huge dip on the average price, especially for non-Shoebox units. But if you ignore this trend because it's due to one project, most of the time, the gap hovers around, about 20% gap. And right now, in terms of Shoebox average unit prices in the prime district, it's about 2003 to 2004 and above to date. So we look further into the CCR, look at the main districts. You notice that District 2 and Districts 2, 10 and 11, generally speaking, the shoebox unit prices are slightly higher compared to the non-shoebox units. So you can see that the price gap is actually fairly narrow, which means that actually shoebox units in these prime districts may have a certain value because of its exclusivity and being located in the city center, and there are certain type of buyers would like to have shoebox units in the core central region, and that's the reason why the price gap is pretty much quite narrow. So now let's look at city fringe, which is out of core central region, which is in the rest of central region. You will notice that the price gap is actually widening. If you look at the last quarter, it is about 1,007 plus per square foot on average for shoebox units, compared to non-shoebox units, which is less than 1,006. So it goes to show that perhaps the demand for shoeboxes in city fringe is picking up. So if we look at certain selected planning areas in the city fringe area, you will see that for Geylang, shoebox units is about 1,005 per square foot compared to about 1,003. And Bukit Timah is actually quite high in terms of per square foot for shoebox units. It's about 1,009 to 2,000. And then for Queenstown, due to some pockets of new launch projects, it's actually about 1,006 to 1,007 right now. And for Bishan, it's slightly lower at about 1,005. So look at suburban regions. You see that there's also a widening price premium gap between shoebox and non-shoebox units. Amazingly, for suburban areas, the average per square foot for shoebox is touching 1,005 even, and right now it's about close to 1,005, about 1,439 compared to non-shoebox, which is about maybe crossing 1,001. So looking at the four main regions in the suburbs, you see that the west region actually shows quite strong growth in shoebox prices. It's in fact crossing 1,005 per square foot, and then northeast region is about lower than 1,005, and then east is about 1,004, and north, because there are not many new launches, so there are not many transactions for shoebox units. So after going through review on sales volume and prices, let's look at rentals for shoebox units. In prime area, the average per square foot per month of rentals is about $7, which is pretty high, but it is on a downward trend compared to previous years where it was about $8. So units that's larger than shoeboxes are hovering about close to $5 per square foot. So you can see there's a huge rental gap between core central region shoebox and non-shoebox. But that said, because the capital value of core central region shoebox units is quite high, so actually the rental yield that you're getting could be between only about 3.3% to about 3.6% for shoebox units. Then for larger units, it's about lower than 3.3%. It can be even only touching 3% for non-shoebox units in the prime area. So for outside central region, you see that the rentals for shoebox units is on a declining trend. Right now, it's only about $5.20. And rental yield still nonetheless is pretty good at between 3.8 to 4.2% because of the lower price of shoebox units. Why is it on the declining trend? It is because as more HDB units are being completed in the last few years, and the HDB resale market is also becoming a competitor to rental in the leasing market, and also more and more city fringe private condominiums are also out in the market. So between city fringe and outside central region, most tenants would prefer to go to somewhere that's closer to the city, and that's actually city fringe areas. So you see, as expected, the rentals for city fringe area, it has been climbing quite fast, and right now it's about $6.50. So rental yield is also pretty positive at above 4%. So there has been a rising demand, especially for city fringe shoebox units. Because if someone wants to rent a city center shoebox versus a city fringe, just a few MRT stations apart, they can save, at least 50 cents to $1 of rental per square foot per month. So most people, if they have the budget, especially for expatriates, they will go for city fringe homes. So after talking about shoebox, I'll move on to something bigger, which is dual key units. So dual key is also not a new concept actually. It first started by HDB actually in the 1980s. They built some dual key units in some mature estates. But however, it was not doing well, the take-up rate was so poor. So HDB stopped doing dual key units. And then later on, there was a first development, a private condo development called Caspian, which is in the west. That was the first condominium development that has a dual key format. And then it's only in the last 1 to 1.5 years apart from till now, dual key suddenly became much more created by developers. So what is a dual key unit? Dual key, basically, this is our own definition. It's like a unit where it has two sub-units, whereby it shares a common main entrance. So essentially, you are buying into one title, but you get to have like two created sub-units. So that also entails, separate facilities like kitchen and bathrooms, and then there might be some sharing of facilities such as the kitchen. So the kitchen can be combined or it can be separated depending on how the design layout is being done. So initially, dual key units were being designed with the intention to accommodate multi-generational families, whereby the young family can stay in one unit and then the elderly parents can stay in the other. Is to provide some form of privacy. And right now, how the market perceives dual key is this: it can be seen as a form of investment also, because in order for some buyers to avoid buying two properties, one to stay and one for rent, they buy a dual key with the hope that they can stay in one sub-unit and rent out the other. So that is one marketing strategy that developers is trying to do. So that's why you see there's a huge number of dual key units in non-landed launches, especially in the first half of 2013. This is actually done by our own research. As many as 724 units were being launched in the first half last year. And second half was really weak because of after the TDSR measure came out, a lot of developers held back their launches. They're trying to re-strategize how their layout can be recreated so that the price quantum can be better met. And then some developers came back into the market and launched quite a number of dual key units in the first half of this year. So if you look at the dual key configurations, there are many types of dual key configurations. And you see that in 2013, most of the dual key configurations are in 3-bedroom and 4-bedroom. So collectively, they form over 80% of the overall number of dual key units in a project. And then in 2014, you see that the configuration has actually reduced in size. There are more 2 to 3 bedroom configurations in 2014 because the most important reason is the price quantum. They need to keep it smaller so that it's more affordable for most buyers. So let's look at how has been the proportion been for 2013 dual key versus non-dual key unit launches. You see that 4-bedroom dual key unit launches can constitute as high as 30% of the total number of launches, and then 5-bedroom is the next highest proportion. But in 2014, you see that it's more evenly spread. Developers don't do a 5-bedroom dual key anymore because the price quantum will be really high. So they focus more on 2-bedroom and 3-bedroom type of dual key units. Okay, this is a lot of numbers, so let me go through essentially what we are trying to analyze. We are trying to analyze what could be the price difference between dual key and dual key units for projects that were launched in 2013. So if you look at, okay, the alignment's not that precise, but what I'm trying to highlight here, it's this project called D-Nest. It was developed by CDL. So you see that they had 5-bedroom dual key units, and then the average price is about 833 per square foot. And if you compare with a non-dual key similar size 5-bedroom, it's the non-dual key is slightly more expensive. And then the percentage of dual key sold is very high, it's about 100%. So dual key was very popular for the project DNES. Then if you look at Stratum, likewise, they have 4-bedroom dual key units, and then the average price is also just slightly higher than a non-dual key unit, and then 75% of the dual keys were sold. However, it's lower than non-dual key sales performance. And then another project called the Venue Residences, and then you see that the dual key price over here, which is 1,003, it's about just in fact lower price compared to a non-dual key 3-bedroom. However, the percentage of dual key sold wasn't that fantastic. That is because they were hit by the TDSR. So the size of 3-bedroom is quite big as well. So that also and similarly, the non-dual key 3-bedroom and in all also did not do as well. So let's look at 2014 to see if there's any changes in the performance of dual key. This project, the Crest, which is very prime located at Red Hill. 3-bedroom dual key is 2008, which is slightly more expensive than a non-dual key, which is 2007. So the percentage of dual key performance is largely similar to the performance of non-dual key sold. So actually this year, dual key performance has not been very encouraging, because the whole market itself is also not in a very encouraging state when it comes to sales performance and price trends. So dual keys are also similarly affected as well. So, and also because the non-dual key kind of units such as shoeboxes and also those typically regular non-dual key units are also lowering its prices. So given the various choices of units available, buyers are thinking, what is their real need? Should they need a shoebox, or should they need a dual key, or just a normal unit? So actually dual key units and shoebox units, if you look at it from an investment perspective, right, they could be competitors to each other. Because if someone wants to buy a dual key and he has the intention to rent out his sub-unit, he has to compete with the shoebox landlords also. And HDB resale market also is rising to become a competitor, because as more and more resale flats are available in the market for rent, whereby more and more owners are actually holding back their resale units and not thinking of selling it. They actually opt to rent it. So they become a competitor to the overall private residential market as well. So because dual key unit types only came out in recent 2 years, most of the newly launched dual key units are not completed yet. So actually it remains to be seen whether how dual key units could perform when it comes to rentals when it's being completed in the next 2 years. So in fact, it will be interesting to see how URA compiles the rental information for dual key, because it is actually one unit but 2 sub-units by itself. So sometimes the owners may not be able to fully declare whether they are renting or they are buying it for owner occupation. So there's this dual dilemma here when it comes to pledging the use of your property. So buying dual key has its risks as well, because I think the authorities have yet to fully look into how they can treat these things when it comes to property tax. So this is just some articles to showcase our Knight Frank research coverage in mainstream media. This is covered in Business Times. Okay, so what's our outlook for the general private residential market as well as for shoebox and dual key? As the buyer's appetite for prime residential market continues to be affected by the current measures, right? We see that the buying sentiment will continue to be weak actually for the next 3 months to even as long as 6 months. However, it is potentially likely that the market might pick up due to some issues, which maybe I can share later on. So there could be some respite for prices in the second half of from the second half of next year. So if we look at Shoebox units itself, do you want to actually buy it for your own stay or for your own investment? Given from a quantum and rental yield perspective, Shoebox does present better value when it comes to these two factors. However, it is important to also look at other factors surrounding the Shoebox unit investment that you're looking into. Of course, location is the most important, and the other important consideration is supply. Whether there are a lot of supply of Shoebox units in the vicinity where the target property is located. So, and one other important factor is our foreign immigration policy as well as workforce policy. As some of you may have known that the influx of foreign workers or work permit issuance has actually reduced for the last 2 years, ever since the elections. So actually, the leasing demand has been slowing down actually for the last 6 to 9 months. So Shoebox landlords also realize that they need to lower their rentals in order to get their units being leased out. So as for dual key, I think dual key is something that it should still be for multi-generational use, because to rent it out as a sub-unit, it really depends on whether the authority can accept that. And also, in the long term, dual key, those who bought dual key for multi-generational use, they may realize that they want to reconfigure their layout in future. So dual key does have its limitations when it comes to the flexibility of its overall layout, compared to if you buy a non-dual key, you can still can do some modifications on the layout. So if you are certain that dual key is really for you to have a multi-generational living format, then it would suit you. If not, it is still more palatable to look at Shoebox units if you are thinking about renting it out as a sub-unit. And of course, the most important factor for property investment, especially in Singapore, is really location. And it's not just locating next to MRT stations, it's also locating next to growth precincts, areas where you can see there's a higher demand for the property, for leasing, whether it's near to an office commercial cluster, or is it near to future extensive network of bus interchange and so forth. So these few factors are really very essential. And going forward, there are actually not many such projects to be launched in the market. And even if they do, they are normally launched at a certain high price premium. So with that, this concludes my sharing on Shoebox and dual key. Feel free to ask some questions during our panel discussion later. Thank you.